So this week we will be talking about breakouts in Ichimoku. This will include a topic on kumo breakouts and Darvas boxes as well as chart patterns. I believe I included profit targets last week, but I know that we already covered that during the basic Ichimoku course, so I removed it from this topic because it's the same thing. I would not want to repeat that topic all over again. But basically, if you're using Darvas boxes along with kumo breakouts, usually the profit targets are similar, especially when you measure the Darvas boxes target. You would find some sort of resistance in terms of kumo elements at the same area when setting the profit targets. So let's do a review of last week's session. This will be a very short review. Right, so last week we talked about the use of moving averages with Ichimoku. Whenever any of the Ichimoku lines are found on the same area as the SMA 50 line, we find strong supports and resistances where prices tend to consolidate. So the confluence of these lines act as a magnet to price. We find prices try to sort itself out where these areas are together, or where these lines are together. Let's check out this chart of PPC. We find at this area there's an SMA 50 line. There's also a kumo top or the Senku A line. That's our box 1. Prices tried to rally previously and then they returned to that level. At this area, we find the same thing, confluence of Senku A and SMA 50. After a brief rally or a few weeks of rally, prices return to those levels. In this area, after a strong rally as well, prices return to that levels. So not only are Senku areas or Senku spans and SMA 50 supports, they're also a magnet to price, which means that prices tend to come back to those levels within its rally. So they can either serve as strong support or a strong resistance moving forward. So a clue that this will happen or prices will reconnect to the Senku A line is when the Tenkan-sen and the Kijun-sen start to move horizontally. For example, in this area, you would see that from a strong movement upward, the Kijun-sen started to flatten out. This is a sign that prices will move sideways and consolidate. So the only place where it will go is the Senku A line and the SMA 50 line. So as prices consolidate sideways, the SMA 50 line also tends to slope downwards because this is merely a reflection of prices or an average of prices. The Senku span and the SMA 50 tend to have similar values once prices tend to consolidate. Because the way they are computed is based on, for the Senku A, it's a 26 days highs and lows. For the SMA 50, it's a 50 days or the 50 periods average. So once prices tend to consolidate, both these lines tend to find a similar area, which is this. They tend to have the same values at certain areas during consolidation, and these values are a magnet to price. So while they tend to be strong support, they also tend to be strong resistances. This is because there may have been an accumulation of buyers at a certain support area. For example, in this box number 1, When prices return to that level, of course, many buyers would want to buy at this area because they see that this is a strong support where we find not just SMA 50, not just SMA 50, but also Senko A, Tenkan-sen, and Kijun-sen lines. So traders will try to purchase shares at that area. So there's an accumulation of buyers. However, if the volume of buyers is not convincing enough to warrant a bounce from this area, then prices will tend to drop down, and the drop down will be strong because buyers who accumulated at this area will tend to sell down their shares because of the breakdown. So at this same level, in box number 2, buyers will try to break this area as resistance. This will be a strong resistance because there's also a confluence at this area. This price level occurred as prices consolidate sideways, and the SMA 50, the Tenkan-sen, the Kijun-sen, and the Senko A's, the Senko A tend to have the same values. Once broken out, price tends to make a strong rally upward. Again, sideways movements, price bounces off the confluence in all these areas. So what clue do we have for PLC here? In PLC, prices start to move sideways. There was a strong support at these areas previously, but notice how the support is starting to weaken. The kumo had started to thin out in this area. There's also a seemingly triple top pattern for PLC as well. The support is not that strong, but this triple top is a strong one. Do you find more resistances than support in this area? Definitely. You have the triple top resistance. You have the Tenkan-sen and Kijun-sen resisting price. You only have the kumo preventing price from moving downwards. And the Chico span is already inside prices, suggesting consolidation. So in this area, since the kumo is very thin, even if there's a confluence between this SMA 50 and the kumo at this area, you wouldn't expect this to be a strong support level because there are more resistances on top than supports at the bottom. So this could break down through this thin kumo. So the thickness of the kumo also matters. In these areas, we find thick kumo support, whereas here, the kumo is thin, therefore you wouldn't expect that to be a strong support moving forward. As well, you can see the Kijun-sen and Tenkan-sen moving sideways. They flattened out, suggesting that you won't expect any strong uptrend from this security anytime soon until it starts to slope up. So here is another chart. Now, this time we'll review our use of Heikin, Ashi, and Ichimoku for trend following. Previously, we talked about bounces or supports and resistances. This time, we'll talk about the use of Heikin, Ashi for trend following along with Ichimoku. Now, why do we use Heikin, Ashi candlesticks along with Ichimoku? Because when you trade using Ichimoku, well, all you have are the support levels, right? You have the Tenkan-sen, Kijun-sen, etc. All these elements telling you that it's on an uptrend. However, sometimes it might be too late to react if you only base your supports and resistances and your cut loss points on these levels. For example, price was able to reach this high. You wanted to do a position trade in this SM, but you didn't realize that you were going to lose all your gains from here to from here to here, because price dropped back to its original price or its bottom. So you would have lost all your profits. Say you're a position trader and you want to hold on to this. You don't have a clue whether this will hold or not. Now this broke a support, so you lost all your profit from here to here. Heikin Ashi candlesticks tell you the trend. After the strong trend upward, you find that there's a trend reversal candlestick in this area. This small body with two wicks on up above and below. This signaled that there's a possible trend change, and this red candlestick told you that the trend is downward. So before we enter into position, what conditions do we follow? For an uptrend, first, there has to be a Kijun-sen crossover. Second, a Tenkan-sen crossover. Third, a Chikou span crossover. Fourth, a kumo twist. Fifth, a kumo breakout. So once we've satisfied all these conditions, we are able to enter the position. So we enter here. So notice how prices made a strong uptrend afterwards. Now from here on, your Kijun-sen and Tenkan-sen serve as support levels. Now at this area, now swing traders can take advantage of the rally. So this is the major trend from here on is upward because price satisfied all the conditions for an uptrend. But there are possible reversal points within the major trend that swing traders can take advantage of. For example, in this area, we see a strong uptrend, but we find that in this candlestick, the trend is weakening because the close on this day is lower than that of yesterday's. Not the close, but the wick. You see lower high wicks. The wick today is lower than that of yesterday, suggesting weakening. And then you see the trend reversal candlestick at this area. This tells you that there could be a correction. And this candlestick tells you where the correction is headed, where the direction is headed, which is downward, because we find a red candlestick. While it has lower and upper wicks, which suggests that the downtrend is not that strong, it still suggests weakness in the short term. So if you were a swing trader, you would have taken your profits at this area, and you would wait for another reversal candlestick below in order to re-enter the position. So it resulted in a strong move upwards once again. So each trend change candle should be a warning for the swing trader to change his bias from bullish to bearish and vice versa, depending on the color of the candlestick that follows the trend change candle. A red candle following a trend change candle signals a downtrend. A green candle that follows a trend change candle signals an uptrend. So here's your next trend change candle. We have a series of trend change candles in this area. So what gives us our direction is the definite candlestick, or perhaps this one. But it resulted in another trend change candle next to it. And then it gave a directional move downward. So we just follow the trend. So here's another trend change candle and a trend directional candle. At this area, we find another trend change candle. and a trend direction candle. So the current direction is upward. So here's another example of a trend that a trader could enter and exit using Heikin, Ashi, and Ichimoku to confirm each other. So in one, MRSGI had a strong uptrend as price is above the kumo, and the Heikin Ashi candlesticks are a succession of green candles with upper wicks. So again, the direction to which the wick is pointing also tells you the direction of the market. Since this is a green candle and the wick is on top, the wick is pointing upward, therefore the direction is up. So we see an uptrend here. This was followed by a long red candlestick. This is, I believe, a gap down. In occasions where, for example, price closed at the high today at 5 pesos and there's a gap down to 450 the next day, you would not find a trend change candle in that area. You would see an abrupt red candlestick with a long wick downwards on occasions when there is a gap up and prices were not able to consolidate properly at the top. So if you don't find a trend change candle and you find a long red candlestick like this, you already know that it is a strong move downward because prices made a quick reverse to the downside and did not consolidate prior to that. This happens in gap downs. And then we find an area where there are a bunch of trend change candlesticks. So a series of trend change candlesticks appeared and the short-term trend reversed to up in number 3. So in number 4, we find that the Chico span broke below the price and price also broke below the kumo. But the Heikin Ashi candlesticks already warned us that this would happen before it happened, because we find weakness right on top of the Tenkan-sen line above. You see the circle beside number 3, that reversal area was right on top of a support line. So we know that that support will break because there was strong selling right on top of that support area right here. You know that this would likely break, and it did. And then a set of reversal candlesticks appeared once again in number 5. And the trend change happened. This is a short rally from the strong downtrend. There's another reversal. So it's easy to spot. You may be late in the trade. I mean, you might not be able to catch the top or the bottom, but the Heikin Ashi candlestick gives you a better confirmation of price's direction versus the regular traditional candlesticks, traditional Japanese candlesticks. So we see some bounces in this area. In number 7, price satisfied the conditions for an uptrend and moved on to a strong uptrend. You find that there's a Tenkan-sen crossover, Kijun-sen crossover, Chico span crossover, a kumo break, and a kumo twist at this area. And the result was a strong uptrend. Now in this area, this series of small trend reversal candlesticks right at the bottom of a thin kumo. So remember, thin kumo on top tells you that there's weak resistance. Since there's a series of small trend reversal candlesticks here, you know that there's a likelihood that the kumo will break, or the price will make a break above the kumo at this area. At the same time, the Tenkan-sen and Kijun span are at the same levels. Usually, Tenkan-sen and Kijun span have to contract, just like moving averages. They have to be converged in the same area for a strong breakout to happen. So this happened here. It satisfied the conditions for a breakout and made a strong move upward. Now here's another trend reversal candlestick. Strong move down. And another trend reversal candlestick at the bottom. So even if you don't look at the indicators, you just look at the candlesticks, you would know that where the direction is headed. But to add conviction, if you add Ichimoku, you know where the supports and resistances will lie. Because if you look at number 6, price tried to bounce here, right? But the kumo at this area is still very thick. So it is not likely for prices to break out of this area. As prices moved sideways, the kumo began to thin. But this area, the thin kumo tells you that the likelihood for a breakout is stronger. So here you find that the price was only able to reach up to a high of the Senku A. In this area, the high was a Senku B. In this area, price was able to break above the kumo because the kumo was very thin. So better find thin kumos when anticipating breakouts. Those have higher chances of success. Now we also talked about using Ichimoku and Fibonacci retracement for bounces. This is the chart for Vita. It had been consolidating above the bullish Fibonacci area at 38.2%. It made several bounces at that level, but it could not seem to break out. It even formed a bearish head and shoulders pattern, which we showed in some of our charts. But at this area, at this point, there was a confluence between SMA 50 and the 38.2% Fibonacci line. This strong support level caused prices to trend up. The kumo at this area is very thick. Therefore, it's a strong support. Eventually, it was able to break the resistance. The Tenkan-sen and Kijun-sen resistance made a crossover. This resulted in a strong move upward to around 250 or higher than that. The Chico span also broke above prices, which confirmed the breakout. However, prices retested the Kijun-sen, the kumo as support and the SMA 50 as support once again, and then bounced strongly from there. However, look at this. Despite the bounce, you would find that this area, the wicks also made lower highs. So this was just a short-term bounce. Prices will continue to move on to break down below the kumo afterwards because it was not confirmed by the Heikin Ashi. There was no strong trend upward confirmed by the Heikin Ashi after this bounce. A series of red candlesticks followed that made price break below Ichimoku. So Heikin Ashi also tells you the likelihood of a breakdown despite the strong support of the kumo and this SMA 50 line. The price was able to break below because the Heikin Ashi gave you a signal that it was going to happen after this lower high right here. If we look at the current chart of Vita, perhaps we can It's the chart of Vita. Let's add in the Ichimoku. So this for lower highs, and the trend is still downward. Again, if the red candlestick has no upper wick, then this is a strong downtrend. This has no upper wick but has a wick at the bottom. Therefore, it's pointing below. The direction to where the wick is headed is where the price is headed as well. So this wick is pointing downward. It's red, and it doesn't have a wick on top. Therefore, it's a strong downtrend. The candlestick that followed is also a strong downtrend. And there's no confirmation yet. Despite the bounce at this area, we don't have confirmation yet that this will reverse. We have to wait for a doji right around this area, because this is the next support level and this already broke. So let's go back to our keynote. So where there's weakness in Ichimoku, you know the supports and resistances, but you don't know when or the likelihood that this will break down as support. So the Heikin Ashi is useful for that, and also the Fibonacci, because when the price broke below 233, which is the 50% Fibonacci. Now this line tells you the bullishness and bearishness. It acts as a midline for this box, for this entire box. So if price breaks below that, we know that it's already bearish because it's below the midline. And in Fibonacci, the midline is a 50% level. So here's another chart of showing divergences, Heikin Ashi and Ichimoku. Now we use divergences to determine the change in trend. We couple this with Ichimoku and Heikin Ashi candlesticks. In this bell chart, we see an uptrend. However, we also see a bearish divergence occurring. This supports the bearishness signaled by the bearish kumo twist days before the price trended downwards. At the top of the uptrend, we find a trend change candle, and then a downtrend followed. Price broke below the kumo and it's still on a downtrend along with the RSI. So let's talk about part 3, breakouts and Ichimoku. Lesson 1, Kumo breakouts and Darvas boxes. So let's review a little about the Darvas box. What is a Darvas box? It is an area of consolidation. It consists of several candlesticks where the price highs comprise the box top and the price lows comprise the box bottom. A new Darvas box is created when the price of a stock rises above the top of the box and stays above it. So here was our previous example in our basic Ichimoku. You would find a series of candlesticks that are locked within a range. So this is where the buyers and sellers try to bargain over the best prices over a period of time. When you connect the price highs the box top is created. When you connect the price lows, the box bottom is created. A trader buys when the price breaks above the box top and sells when the price goes below the box bottom. So these are the rules of Darvas boxes. We buy bullish breakouts above the box. Breaks above the upper edge of the box signals a trend continuation. Sell when the price closes below the box. Breakouts below the box suggest trend collapse. So the midline is computed as the box top plus the box bottom divided by 2. The midline of the higher box acts as initial resistance when a breakout happens. If price surpasses that midline and it is able to reach target prices of the breakout, expect prices to retrace. The initial support line at retracement is the midline. If the midline fails to support the price, expect a retest of the box top that was broken or the breakout point. Here was an example of how to compute for the midline. First, we draw the box. The box top was at 950. The box bottom is at 835. The midline is computed as 950 plus 835 divided by 2 equals 893. So DFNN was bullish above this area, or it's still bullish above the midline of 893. Early speculators could buy when the price crossed above the midline with a cut loss below 893. Breakout traders would buy on the break above the box at 950. So how do we get the target price for the breakout? We get the range of the box, which is 950 less 835 equals 115. The target on the breakout is computed as the box top plus the range of the box, which is 950 plus 115 equals 1065. The actual high when this breakout happened was 1046. So this is an approximation of target prices based on Darvas boxes. There's a 20-cent difference, but that's acceptable, given that we are only using boxes to determine price breakouts. I believe price was able to reach up to a high of 11 or 1108 for the security. So two trading styles could be used with Darvas boxes. First is range trading, where you buy at the bottom and sell at the box top, which requires time and patience. Second is breakout trading, where you buy at the box, break out above the top, and sell at the next possible box target. Now this shows a trading range with Darvas boxes. This is the trading range for Felix Mining. The entry point was at the box bottom. The exit is at the box high, or when bearish signals and lack of momentum appear at the top, or below the box bottom if prices break down. But of course, if you find weakness at the top, you might as well protect your profits and don't wait for the market to erase all your profits or regain back your gains. If you wait for the box bottom to cut your losses, then you would have lost everything. Whereas if you sell at the weakness above the box top or at the break below the midline, that you would still be left with some profits to keep. Excuse me. So this shows breakout trading with Darvas boxes. I drew the Darvas boxes on each range. Then the midline. And these are the places of entry. You either buy on the breakout or buy early above the midline if technical indicators show bullishness as well. So this have to be supported by indicators RSI, There are two places to exit: sell on bearish signals and loss of momentum, or sell two flux below the box top if it failed to break. Darvas boxes are not only for day traders or swing traders. Trend followers or position traders may add on breakouts or at support as long as price is on an uptrend. Here's an example of a chart with Darvas boxes at two areas at the bottom of its chart. Here's the first and here's the second. Now both have been consolidating above the midline before it broke out. Now this consolidation above the midline was a signal that the breakout was likely to happen. Notice that there are many more candlesticks on top of the midline in number 1 and in number 2. Therefore, this is more bullish than bearish, even if prices try to break down here at this area. This is your shakeout move because sellers have to be convinced that the price is going to break out. So they try to sell down the prices. When they find that price only made higher lows at this area, they would tend to buy back because this still shows bullishness. Price was not able to break below the box, or at least reach the bottom of the box, because there was a higher low in this area. So a breakout was likely to happen because there were more candlesticks on top of the midline than at the bottom. However, their post-breakout price action was different. In number 1, right after the breakout, price made a deep retracement. The deep retracement in number 1 wiped out all of the breakout traders' gains. In number 2, right after the breakout, price made a shallow retracement. Hence, the position trader would likely hold on to his position and try to ride the trend. So why did 1 behave this way and 2 behave another way? Why was the retracement in 1 deeper than the one in number 2? So on breakouts in the midline, as price consolidates above the midline, if it is inside or below a thick kumo, the breakout is likely to be weaker. In this situation, the retracement post-breakout is likely to be deeper. As prices consolidate above the midline, if it is inside or below a thin kumo, the breakout is likely to be stronger. In this situation, the retracement post-breakout is likely to be shallow. Now let's differentiate between a weak breakout and a strong breakout. In number 1, a Darvas box breakout occurred before the kumo breakout. Here's your Darvas box breakout, and here's your kumo breakout. The signals occurred below the kumo, and the Darvas box breakout happened below the kumo. So here we find the Tenkan-sen crossover in A, the Kijun-sen crossover in B, and the Chikou-span crossover. Now, this resulted in a breakout nonetheless, but the strength of the breakout is in question because the Darvas box breakout happened as price was still below the kumo. So this means the price was still on a downtrend or still not officially on an uptrend when the breakout from the Darvas box happened. So this was the target of the Darvas box. You notice that it's the same size as the previous Darvas box. So this was the estimated box target which was achieved. Now after this, price consolidated and then moved back downwards. It found support at the Senkou B line, which was at the same level as the previous box stop. So there was a box stop retest. This was a deep retracement that wiped out a trader's gains. In number 2, a Darvas box breakout happened after the Kumo breakout. So the price was already trending upward, and when the breakout happened, it was already above the Kumo. This was the Kumo breakout. So the Darvas box was above the Kumo. No, the breakout happened above the Kumo, and here was the Tenkan-sen crossover, the Kijun-sen crossover, the Chikou span crossover. Now the Chikou span crossover happened above the Kumo versus number 1, which previously the Chikou span was hindered by the Kumo from moving up further because the Senkou span A and B are above it. So this resulted in a price breakdown or a reversal of prices toward the lower end of the box. In this situation in number 2, the Chikou span was already free from the Kumo, so there's nothing stopping it from moving upward. It was able to reach its target prices based on the size of the previous box. Prices also moved downward afterwards, but it was supported by the Senkou A line. And this was nowhere near the box top. So we're talking about the retracement after the price targets were hit on the box top. So the retracement here is more shallow than the one in number 1. Now on the strength of breakouts, the location of the Ichimoku signals with respect to the Kumo prior to the breakout determines the strength of the breakout. If a Darvas box breakout happens when prices are already on an uptrend or above the Kumo, the breakout tends to be stronger. If a Darvas box breakout happens when prices are on a downtrend or below the Kumo, then the breakout tends to be weaker and will tend to have a deeper correction. So here are another couple of boxes that are found on an uptrend. At box 1, we find that prices had been consolidating below the midline of the box. We would find that there are more candlesticks at the bottom of the box than on the top of the box in number 1. This shows bearishness because price was unable to cross above the midline. The break below the midline warns us of the weakness and the possible breakdown. Then eventually, price broke below the box and started a downtrend. In box 2, we find the same scenario, wherein prices consolidated below the box and resulted in a strong downtrend. Here's the same chart with Ichimoku. The Darvas box provided us with a clear picture of the levels or the actual prices to watch in order to establish our bias, whereas Ichimoku only gives us the big picture. The midlines and the Darvas boxes will nail you down to the smallest details, including the actual price level to watch for bullishness and bearishness. So the break below the midline signaled the likelihood that the price was also going to break below the Kumo and start a new downtrend. The bearishness was also confirmed by the bearish Kumo twist that was found right beside the box. Again, Kumo twists are found 26 periods ahead of the actual signs of bearishness or of the actual breakout. So you have a warning signal that the prices will move in that direction as the prices consolidated below the midline. Now we can also use Darvas boxes along with Ichimoku to find the proper timing for breakouts and breakdowns. So it provides us with the tools to time the market more efficiently. In this chart of MRC, we drew Darvas boxes. We find the ranges for prices. We see that prices in the first box were at the top of the box, suggesting possible breakout. However, this could continue moving forward. This continue consolidating at the midline for a long time. Right? There's no definite timing as to when the breakout will happen. As long as the price is above the midline, it can keep consolidating above the midline for a long period of time. And we will be waiting inside this box until it does. Now I added Ichimoku to the same chart to provide us a clue with the timing of the breakout. Now price has to be trending above the bullish kumo, where the Senko span A is above the Senko span B. So we know this is bullish already when we added the Ichimoku chart, because price had already been trending above a bullish kumo. So that's the first condition to find the proper timing. First, the price has to be above the kumo. In this area, while price was able to break above the midline, the kumo was not yet bullish. It was still bearish, so you wouldn't expect a breakout to happen during this time. As prices moved sideways, the kumo already twisted and the price consolidated above the kumo. It was already on top of a bullish kumo and the bias was bullish. So you know that the breakout will likely happen soon. So the second condition was that price has to be above the Tenkan-sen and Kijun-sen line. Now in this area, price was already above the kumo, but it was not yet above the Tenkan-sen and Kijun-sen line. Price moved up and was able to close above the Tenkan-sen and Kijun-sen line in this long candlestick in this area. If you can see it, this long candlestick closed above the Tenkan-sen, the Kijun-sen, and the kumo as well. So you have two conditions met. Third condition was that the Chikou span has to be above the price. If we count 26 candlesticks back, the Chikou span broke above prices at this level. This was this candlestick that followed afterwards. In this candlestick, price was already above Kijun, Tenkan, and Kumo, but the Chikou span was still trying to get above the price. It happened here. A Kumo breakout happened, Chikou span breakout happened in the next candlestick. So you have the third element present, or the third condition for a breakout present. When these conditions are present, the likelihood that a box breakout will happen is higher. So in the next candlestick, the breakout actually happened. Price retested the box, but only it was not it was just simply a breakout confirmation at this area. And upon breakout, price did not have a deep correction anymore. It was a very shallow correction. Price could not go back down to the breakout level. It was a strong breakout with a shallow correction because the breakout, or the Kumo, the Darvas box breakout, happened above the Kumo. So the Darvas box thus simply enhances or gives clarity to the price level to watch for bullishness, using the midline as a demarcation area between the bulls and the bears. Now if you look at this area, You can also consider this a box, right? This area, the small one. Let's go to our Instagrams chart so I can show you. So in MRC, this was the area that we were referring to. This was the breakout area. In this area, we find that the price was also above the Tenkan and Kijun Sen. However, it's still below the Kumo. Therefore, when price tried to break above this level, it was not able to break above this level. It had to retest the Kumo as support because the weak signals happened here. The signals happened at the weak area below the Kumo. So when signals happen below the Kumo, they are weak signals. It broke above the Kumo but failed to break above the box, because at the same time, the Kumo was still red. Therefore, there's a shallow correction that happened to retest the Kumo as support. Once the Kumo twisted, then the chances for the breakout became higher. So a lot of people may have been faked out here or here at this area. People might have thought this is the one, but again, it was still sitting on a red Kumo, so it was still bearish. So it had to wait for the proper timing for the prices to be above the Kumo and for all the elements to be present to ensure a strong breakout afterwards. Let's go back to our keynote. Now, the Ichimoku elements also provide us with an efficient timing on the breakdown of a security. In this box, we find that prices had been consolidating below the midline. This would be the midline. This area would be the midline, right? Prices had been consolidating in and out, and lately there were more candlesticks at the bottom of the Kumo. For the momentum trader, you would have already sold when price broke below the Tenkan and Kijun Sen line. If you're a bounce player, you would have waited here at the Senkubi. It did a short bounce here. Remember this 34 to 42 area made a short bounce. So what were the signals that this was going to break down from below the box? Aside from the fact that it was below the midline, the price has to break below the Senku A line. It has to break below the Tenkan Sen and Kijun Sen lines. And the Chikou span must break below the price, which happened here. When these conditions are present at the same time, price is also below the midline, then the breakdown will likely happen soon. So notice that people who don't use Ichimoku had been expecting or had been anticipating for MRC to bounce at 34. But we were already speculating that this would do a breakdown because this was already below the Kumo. People were anticipating a return back to 44 area at least because they were looking at the triangle here. But since price had already broken below the Kumo, then the chances of the triangle happening is less possible, is lower. So this was the breakout area that satisfied the conditions, and this was the breakdown area that satisfied all the conditions. So here's the chart of AGI without Ichimoku. This same chart will be shown with Ichimoku later. So this shows Darvas boxes again with breakouts and breakdowns. Again, we don't know the timing of when this will happen. But when we add Ichimoku, there's a kumo twist. Price has to be trending above the bullish kumo. Price has to be above the Tenkan and Kijun Sen. But if you look at AGI, it was a weak breakout with a deeper retracement, because if you update this chart of AGI, I think I made this early this week, August 9. But if you update this chart of AGI, it already retested the box top. So the signals happened below that kumo. So this was a breakout, but it was a weak breakout because the signals happened below the kumo. And the kumo twist happened days later. So this was like a premature breakout. This is the sign that the breakout will happen as well. Price is below the Tenkan and Kijun. Chico span broke below price. And it broke below the Senko A, which resulted in a strong downtrend. So this was a deeper correction because the elements happened, the conditions happened below the kumo. So you get a sense of the proper timing if you add in the Ichimoku. If you draw boxes only, you don't know how long the box will be, how far the box will go along. So adding Ichimoku tells you the timing. Now the midline is used as an early warning signal for the possibility of a breakout. The Ichimoku signals provide a clue to the strength of the breakout. When used together, traders can plan entry and exit levels more efficiently. Now let's talk about chart patterns in Ichimoku. Chart patterns put all the buying and selling into perspective by consolidating the forces of supply and demand into a concise picture. Chart patterns signal to traders that the price of a stock is likely to move in one direction or another when the pattern is complete. Chart patterns can be reversals or continuation patterns. Chart patterns establish bias in the bigger picture. Used with Ichimoku, we get additional confirmation on the direction of the price. If chart is forming a bullish pattern, check for kumo twists and bullish Ichimoku signals. If chart is forming a bearish pattern, check for kumo twists and bearish Ichimoku signals. Here are some reversal patterns. You have the double top, the double bottom, the head and shoulders top, the inverse head and shoulders, and the falling wedge. Now here are some bullish chart patterns. Here is a reversal pattern, a cup and handle pattern as shown in this chart. The cup forms after prices move up and looks like a bowl or a rounding bottom. When the cup is completed, a trading range develops on the right-hand side to complete the handle. A break above the handle signals a continuation of the prior uptrend. So here's your cup and handle pattern for Annie. Now the target prices still have to be met. Annie had already broken above the resistance of the handle, but had not yet reached its target price of 1080. Despite a chart pattern manifesting, there is no guarantee that the chart pattern will be completed. Now, however, with Ichimoku, we are able to assess the likelihood of the trend to continue by taking cues from Ichimoku. Chart patterns provide a general roadmap, while Ichimoku gives you the entry and exit signals as well as the warnings of the possible reversals. In this Ani chart, we see a strong downtrend to the left side as prices trended below the kumo. And then price broke above the kumo and consolidated into a handle pattern. This handle had been forming above the kumo. And then price broke above the kumo. And then prices broke above that breakout point. Now price stayed above the Tenkan-sen. Now how did we know that the breakout was going to happen with the help of Ichimoku? Price had been consolidating on top of the Tenkan-sen, these three candlesticks here. It had been consolidating above the Tenkan-sen. It refuses to break below. Therefore, we know that the likelihood that the breakout will happen is high. So this strength, prices had been consolidating at the breakout point. Therefore, you know that this will break out and the breakout is likely to be strong because it was able to challenge all the sellers at this area. After the breakout, price continued to trend above the Tenkan-sen line. It continued to trend above the strong momentum area. That's how we know that a breakout will happen, because of the strength at this area. And there's also a kumo twist at this area, which adds to our conviction that this will be a strong breakout. And as well, the kumo had also been sloping upwards, as well as the Tenkan and Kijun-sen. If the Tenkan-sen started, or the Kijun-sen started to move sideways or to flatten at this area, you know that the consolidation will be longer. But it did not flatten at this area. In fact, it sloped upward at this area. So the next reversal pattern is the falling wedge. This is the chart for MCP back in 2015. It starts wide at the top and forms a cone that slopes down and converges at the end. So this was the falling wedge for MRP. And this was the breakout point. Again, let's talk about timing. We know that price already broke above the falling wedge, but it was not able to make a strong move upward. Afterwards, it moved sideways. Now, this is the weekly chart, so it's longer than it looks. So this is a weekly chart. Many weeks of consolidating before an actual breakout happened. Now, when we add the Ichimoku, we find the reason why this breakout took too long to materialize, because the break above the falling wedge happened below the kumo as well. So we combine the chart pattern with the kumo to determine timing. This happened below the kumo. MRP is still faced with this thick kumo ahead. It is also faced with the Kijun-sen as resistance. It trended below the Kijun-sen for many weeks. Once price was able to break above the Kijun-sen, it resulted in strong move upward in this area. So the Tenkan-sen also crossed above the Kijun-sen. There's a Chico span breakout right here. At this area, the Chico span broke above the price. Now we count 26. This at kumo twist happens 26 periods ahead of the price, right? So if you count backward, this was the candlestick. This candlestick, at this candlestick, the kumo twist also happened. So at this area inside the kumo, the trader already knows that this will form a strong uptrend at this area when it was still at 4 pesos. Because 26 periods ahead, the kumo twist happened. And at this area, the price was, Chico span was already above the price, and price was already above the Tenkan-sen and Kijun-sen lines. So the Ichimoku guide the trader and make it known that the reversal will materialize as long as price stays above the Tenkan and Kijun-sen. The chart pattern puts into perspective the form that the uptrend will take and as well as the target prices. So if you look at the falling wedge here, the top of the falling wedge was at 8 pesos and the bottom was at 5 pesos. The initial target of this falling wedge, if the breakout point is here, was this 450. So 1 plus that, this was 150 plus 3 pesos. The target was here. So the target of the falling wedge was met here at 450. This is why there's hesitance in this area. You notice price trended down once again or moved sideways after it reached a target of 450. But after that falling wedge pattern, MRP also created a cup and handle pattern. If you can imagine this cup and handle. There's a cup and handle here. This becomes our next pattern moving forward because the target for the falling wedge had already been met. And the breakout point for the cup and handle was at 450. It had broken that resistance, the top of the cup and handle, and made strong moves upward. Again, at the resistance point of the cup and handle of 450, we find strength as the candlesticks trended above the Ichimoku elements as well. That resulted in a strong move upward. So these were the bullish elements. Now the next reversal pattern is the double bottom. There are two lows near the same area. The breakout point is above the previous high. Now here's the chart of PNX. Here's the first bottom and the second bottom. This was the top of the range and the bottom of the range. The resistance is the top of the range. So once price broke above that range, PNX made strong moves upward. But again, with regards to timing, we have to look at Ichimoku. It had a successful breakout once the breakout happened on top of the kumo. Since the breakout from the double bottom was accompanied by a break above the kumo, the trend was strong and retested the kumo as support, which resulted in further uptrend. So PNX surpassed the target of the double bottom and then formed a cup and handle in the same way that MRP also formed a cup and handle after reaching the target of its previous chart pattern. At the breakout point, price bounced off the Kijun-sen. There was the breakout point. Price bounced off the Kijun-sen, the kumo, and then proceeded to break out. So price bounced off the kumo here and then proceeded to break out above the Kijun Sen. Now our next pattern is the inverse head and shoulders pattern, which is also a bullish reversal pattern. It has 3 successive throws: the left shoulder, the right shoulder, and the head. So ideally, the left and the right shoulder should be equal in length, or equal in, the range should be equal for the left and the right shoulder. The length and the width should also be equal. Well, that's ideal. In other words, the length of the consolidation of the left shoulder should be the same length as the consolidation of the right shoulder to form a perfect inverse head and shoulders pattern. The height should also be the same in the left and the right side. The resistance from the head to the height of the left and right shoulder should be the neck. It's called the neckline and is the resistance point. The height of the head added to the breakout point is the price target. Now here's the chart of Brown showing an inverse head and shoulders pattern. Along with Ichimoku, we find that as the pattern was forming, the price was still below the kumo. The general trend was still sideways to downward. So let's add in the Ichimoku. So at this point, when the left shoulder and the head was forming, it was still below the kumo. So this was still bearish. And the kumo was also very thick. The only time that the price became bullish was at the right shoulder, this area, because prices started to trend up above the kumo and resulted into a breakout. Let's talk about bearish chart patterns. A double top is a bearish reversal pattern. It's made up of 2 consecutive peaks that are roughly equal with a moderate throw in between. The trend changes from bullish to bearish. Here's an example of a double top pattern with Ayala Land. In a double top, you also have to look at the trend line right here. You know that the double top will materialize if price breaks below the trend line. It has a neckline, which also serves as a bounce-off point. So here was Ayala. There's a prior trend since 2009. There's a trend line. There was a first peak at number 2, which is the highest point of the current trend. There's a second peak and also a throw at number 4. Number 5 was a decline from the peak. Number 7 is now support turned resistance after the double top pattern was reached. A target was reached at number 8. So there's a breakdown from the double top. Number 8 was reached as price target, and then the previous support now turned into resistance. Now on volumes, there has to be a volume expansion on the break below the support line. So this was the target computation for Ali's double top, that this was previously in 2015. So the actual reached was 35.7, but the target was 35.2, which was not a very big difference from the target price. So here's the current double top for PLDT. Now we add in the Ichimoku elements. Previously, if you just look at this double top, we don't know whether it will materialize or whether the price will actually bounce off the neckline at 200, at 2000. Using Ichimoku, we know that the sentiment at that area is already very bearish. Therefore, this support line or the double top support line would likely break. So some people anticipated the bounce here. That's why there's a green candlestick at this area. However, it proceeded to make a strong downtrend because at this area, price is already below the kumo and all the Ichimoku elements, and the Chico span is below the price. Now you wouldn't expect a turnaround, a strong turnaround at this area because the Tenkan-sen and Kijun-sen are still in huge divergence. In other words, they're not converged together. Again, for a breakout to happen, for example here, for a strong breakout to happen, the Kijun and Tenkan-sen have to be in close proximity of each other. In this area, these two lines are still in huge proximity from each other. Therefore, if a breakout happens above the Tenkan-sen, it will already be resisted by the Kijun-sen, and you won't expect this to move up above the kumo anytime soon. So this is a double top for PLDT. This bearish kumo twist told us that this was going to happen. The Tenkan-sen crossovers were also an indication of bearishness and also a break below the price. So we don't see any form of reversal for TEL happening soon. We see a possible price consolidation in this area. I'd like to show you the current chart of TEL. Excuse me. Let's use the regular candlesticks for this because it's easier to identify the pattern. Let's remove Ichimoku first. This was the double top that I was referring to. Let's go to the monthly chart. This was the double top. But here's the current area. The current situation is this. Let's go to the daily chart. This is the current price move. What chart pattern do you see? Again, this is an inverse head and shoulder pattern. No, sorry, not an inverse, a head and shoulders pattern. Possible head and shoulders pattern. So on this bounce, we see a strong resistance at 1,800 area until 1,810. Again, for head and shoulders patterns or inverse head and shoulders patterns, it is ideal that the length and the width of the pattern is the same. So you know the timing for this box is the previous timing, previous consolidation range and timing and time period for the left shoulder. Just move it here. This would be the timing for the right shoulder. So your scheduled breakdown would probably be in September. If it does break down, it will happen in September. If not, the bottom will happen in September. The bottom of this head and shoulders pattern will happen in September, around September 20, 21, 25. A bounce could happen here or a breakdown. As long as the important thing is it will reconnect to this bottom in September, 3rd week of September. But still, this still has a chance to go back to 1801 for a bounce play from this area to 1801. If we add Ichimoku, what do we find in this area? We find the Senku A and B, Senku B here, Senku A here, resisting at this area. And also we saw a bearish kumo twist So we know that there's a huge chance that this will not break out. This will have a hard time breaking out because of the kumo twist and also the Senku A and B at the same area. Now we're not saying definitely that this will not break out, but it will have a very hard time because of the chart pattern and the kumo in confluence with each other as to the bearishness in the time period, at least for this time period. This is also a very thick kumo. So if it does reach this level, if it tries to break out, it will consolidate inside the kumo first because it's a very strong resistance area. So this was TEL. This is the chart of IMI. This is also a head and shoulders pattern. Chico span already broke below the price. Price closed at, this was in August 9, so let's go back to, I prepared these slides early. So let's go to IMI to see the recent price movement. So indeed, this broke down below that Senko B, the Senko A line, and is now supported. Next support is at this area at Senko B, 1134, which is the bottom. Now let's put in the Heikin Ashi just for fun. There's still strong downtrend. There's still a wick pointing downward. There's no reversal candlestick as of yet. So if you want to be sure about this trade, just wait for the trend reversal candlestick at this area. Let's hope that it consolidates first before bouncing, if it does, so that we have time to confirm. Because like we said, Heikin Ashi is not as fast as regular candlesticks. For example, regular candlesticks can show you a hammer at this area and then the next day it's a strong rebound. In Heikin Ashi, it has to wait for the 2 days at least in order to create. It has to take into consideration the bullishness of the previous day's candle and today's candlestick to form a trend reversal candlestick. So it might be late, but at least it's a more refined signal than your regular Japanese candlestick. For example, you might have a hammer here. Traders would be buying already and there's a strong uptrend. It will only be a Heikin Ashi candlestick will only form after that long green candlestick is formed. It will create a trend reversal candlestick right after that long candlestick had been formed using Japanese candlesticks. So it may be late, but it's more refined. So there's no sign of reversal yet for IMI. There's a bearish head and shoulders pattern. And if you see Senku A sloping down like this, you know that it's likely to do a twist because it's starting to converge with Senku B. They are starting to thin out. A reversal will likely happen since they're trying to meet at the same levels already. This means that the 52 and the 26 period average, or the Senku A and the Senku B, are starting to have the same average levels. Therefore, the short-term picture becomes less bullish because this is sloping down. And like we said about Kijun and Tenkan-sen, if they start forming flat patterns or moving sideways, we know that the uptrend is probably over. They both have to be trending up like this for an uptrend to continue, but since it already moved sideways like this signals consolidation. So this might bounce off this point, in which case this would be your first resistance at 1294. if it does bounce off that point, because that is the head and shoulders support. Sorry, it's 12, 13, 20. Now we have consolidation, continuation patterns. Previously, we talked about reversal patterns. Now let's talk about flags and pennants, which are continuation patterns. These are the most profitable patterns that you should look out for because they result in poles afterwards. That's why we're always on the lookout for flags and pennants. So this is a bullish flag. This is a bullish pennant. This is a bearish flag and a bearish pennant. So these are setups for potential breakouts, and the breakout is usually a momentum move, a strong move upward or downward. So here's the chart of MAC. This was a trader's favorite for the past few months because it had been on a strong uptrend, and after forming flags, they result in strong uptrends afterwards. Flag again, strong upward movement. Another flag, a strong upward movement. Now, how does Ichimoku help in this scenario? Notice how the breakouts happen when the price reaches the Tenkan-sen line. If we remove the Ichimoku, we don't really know how long this flag is going to take. It can go on further. It might turn into a box consolidation rather than a flag, because a flag, typical of a flag is that it happens within a short period of time. If it exceeds a week, then the flag is in question. If the flag pattern exceeds 1 week, it's in question. It might turn into a long sideways or a box pattern or a Darvas box pattern rather than a flag. So the Tenkan-sen helps out in this scenario because the prices, when they reach a Tenkan-sen, they tend to break out. When the flag reaches the Tenkan-sen, it tends to break out. In this scenario, in this scenario, in this scenario as well. And in this scenario, when the price reaches a Tenkan-sen, it breaks out. However, you know from this scenario that it tried to form a flag as well at this area, but it broke below the Tenkan-sen, so you know that uptrend is over as well, because it was not able to follow the previous movements it did here, wherein it bounced off the Tenkan-sen. Since it's failed here, then the uptrend is over. It found support at the Kijun-sen last week. So you can expect a sideways movement to downward movement from this and not an upward movement anymore. It's a possible, it might form a triangle or a Darvas box from here on. Bloom made flags, this area, this area, and this area, which resulted in upward moves after. These flags also ended at the Tenkan-sen and Kijun-sen lines. When price reached the Tenkan-sen line, it bounced. Or the Kijun-sen line, the red line is the Kijun-sen line. It bounced and broke out afterwards. However, in this scenario, it also tried to make a box pattern, but it failed to break when it reached the Tenkan-sen line or the Kijun-sen line. So we know that the uptrend is over as well because it failed to replicate the previous moves. It went on to move sideways and eventually broke below the kumo. So this is our, before I say goodbye, I'd like to show you some chart patterns from this week's movements. I already showed you IMI, Annie. Heikin Ashi candlestick still shows there's no reversal signal yet. Let's add the moving average, but this is a good bounce play because if you look at the moving average last Friday, it attached to SMA 50 line. Usually when prices move towards the SMA 50 line, there's a bounce of possibly up to a 10% bounce. SMA 50 at 850. If you look at the regular candlestick, it's dodgy. So 850. There's no clear reversal yet. This breakdown happened with a large volume. So this is something to be worried about. So the best you can expect for Annie for the meantime is just a bounce play. Don't go long on this yet. This is the chance for Annie. The Chico span is also already on top of price, so it could bounce. It could bounce from that. So this is a definite bounce play for next week. This is already sloping down as well, so this is showing weakness. This is strength. Slope upward is strength like this for the kumo. Slope downward like this is weakness. Now if we draw we use this as a base. When using candlesticks with Ichimoku with Fibo, use the regular candlesticks and not the Heikin Ashi. Well, you can use the Heikin Ashi, but this for this purpose, we see if price is able to hold above. It still was not able to hold above 881. But nonetheless, it's an area. So as long as price keeps closing above or near 881, this still has a chance of moving upward. This might do a sideways movement from here until the kumo support. When SMA 50 hits the kumo, we might experience a bounce, as in previous examples where a confluence of SMA 50 and kumo results in a bounce. And at this area, we also find that 861 is a 50% Fibo area. So with three factors happening in this area, you might see a bounce. It may happen here or here because there's also a confluence in this area. Likely here because price was able to hold above 860 or 856. So bounce play first, trend following later for Annie. If it proves that, it bounces off this kumo. If you want to do a breakout trade, only buy above 950. Because if you buy here, if you buy this area, there's so many resistances. There's the Tenkan-sen resistance, the Kijun-sen resistance to look out for. So this might be a low reward scenario. If you buy this area and it bounces, this is your first resistance at 891, 850 to 891. And then you have a resistance at 9 pesos and then a resistance at 948. So if you want a stronger move, just buy above 948 because there will be no resistances on top of that. I'd like to show you MRC. This is still generally on a strong move downward. Now last week, it made a bounce move last Friday. Let's change the MA50 here. I showed you that the bounce here, the bounce MA200 was near 26, right? 26 to 265 was what I mentioned in Bukaka is a probable bounce point because, but if it breaks below that, your next support is at the previous high of 25 to 24. Okay, let's use regular candlesticks because Heikin Ashi is good for trend direction, but when finding price levels, it's not as useful. So we said previously that the bounce point would probably be at SMA 50, 26 to 25, but if it breaks below that, the next one is at 25 to 24. Again, this moving average adjusts based on prices. So before the day started, this was at around 265, 26. Since prices made a new low and a new closing price, it added to that average. So prices will tend to follow. The SMA will tend to follow. So it did the bounce here. It broke below 61 Fib, bounced off SMA 200. But what I'm trying to show you here is the bearishness from this point on, we see a huge uptrend, and then the Kijun Sen started to flatten. This is the Kijun Sen, and also the Tenkan Sen flattened in this area, suggesting that this will consolidate. And then there was a bearish kumo twist, and then Chico span broke below price. So we already had early warning signals that this was going to happen. We said that when price reaches this area, there may be a bounce. I'd like to pull up that chart from Bukaka just to show you what I mean, because I would like to compare this with the Alco chart. I think this was the chart. This was the chart I was talking about. There was a bearish kumo twist. Break below the kumo was bearish. The Chico span break below the price was bearish. You might experience support at 32 and it might bounce off this level, but we only expect a bounce. The RSI was also below 50 already. So I'm showing you this because I'd like to show you the Alco chart as well. I compared this to the Alco chart as well. It looked the same. This Alco chart shows you the bearish kumo twist, the Chico below the price, and resulted in a strong downtrend afterwards. The same thing happened. RSI was also below 50. The same thing happened for MRC. So since MRC already bounced last Friday, I would like to show you Alco. This could bounce as well. Look at the 61 Fibo. Price bounced off that 61 Fibo level. And it also formed. This is not technically a hammer because in a hammer the wick has to be twice the size of the body. But there was rejection at this area. There's no buy signal yet from Heikin Ashi. But just like MRC, there's no reversal candle, but in Heikin Ashi, it still shows a strong downtrend. This refers to the general trend, but it nonetheless bounced short term. I think we're looking at the wrong time frame. Let's look at the minutes chart for MRC. This was your minutes chart. Now let's use Heikin Ashi candlestick. At the low of 26, you find this trend reversal candlestick here. And then it had a green candlestick following it. Another trend reversal candlestick. So this was stuck in a range. Now your trigger to buy for most momentum traders was when it broke above the box top. Let's make the box top bigger like this. But this Heikin Ashi candlestick already told you that the bearish sentiment was waning. Prices consolidated within the box. And then there was a definite trend direction candlestick here. After this dodgy or this trend reversal candlestick, there's a strong green candlestick that happened right at the breakout point of the Darvas box. So this resulted in some buying. Again, prices were resisted at 28, which was a resistance level, the Kumo top or the Senkobi line. Then there's a trend reversal candlestick here, a Heikin Ashi trend reversal candlestick. And then there's a trend direction candlestick here. This told you that the direction was up rather than down after this trend change candlesticks. And prices moved on upwards. So it hit its head at the SMA, the MA 200. Let's change it to MA 50 because. So at this point, traders got interested when it broke above the SMA 50 line. There was accumulation here and then a breakout above the kumo. So this is why there's a strong move upward, because it bounced off the SMA 50 line. But like we saw earlier, there's already resistance at 30, which was the MA 200. Let's look at where the MA 100 is found. It also broke above MA 100 at 28, so 28.5. But nonetheless, the Ichimoku signals already gave you buy signals here. Tenkan-sen, crossover, Kijun-sen crossover, Chikou span breakout at this area, confirmed by the Heikin Ashi candlesticks, and then a Kumo breakout at this area. I would like to show you Alco. What do you see in the 5-minute chart for Alco? There seem to be strong volumes at this area, strong selling, selling waned. And then what do you see at the end? There's a volume breakout at the closing. Now let's remove. There's a Chikou span resistance here. So what would be your trigger to buy if you want to use this for bounce play? Your trigger to buy is when the Chikou span is able to break above this Kijun-sen line. This is 93. For the Kijun-sen line, the resistance is 90. No, wait a minute. The Kijun-sen resistance is 93. Since it's moving sideways like this, if it moves sideways next week, the resistance would now be at 92. Your trigger to buy would be at 92, which is also the Kumo top, which is also the Darvas box top. And then your next resistance would be, as it moves along, you would only find out what the Kumo resistance is as it moves along. If it breaks above this box, your next resistance would be this, 94. If it breaks free from that, then it's free to go. Yeah, it's good to go. Now let's look at the scenario for the indicators, the relative strength index. What do you find in the relative strength index? Let's change the setting to 30. Yep, you find a bullish divergence at this area. There's a bullish divergence here. And then a bullish convergence at this area. Do you remember the cycles that we studied? And what pattern did it form? I'm just mixing everything together now. This might look confusing, but I find it very helpful to have all bullish elements telling me the same thing. This is a falling wedge, right? This is a falling wedge pattern. Let's switch to the regular candlesticks. This is one advantage of Heikin Ashi and minutes charts. It's easier to see. If you use regular candlesticks, this is all you'll see. You see a bunch of lines, so this makes it easier. Falling wedge. If price breaks above 92, resistance at 94. And now this is bullish. Previously we talked about bearishness is when the Senkou A moves like this. Now the Senkou A moves this way. This is starting to be bullish because it might form a Kumo twist because these two lines are starting to kiss each other. Let's remove all the mess right here. I hope this doesn't confuse you because I'm using Many elements from our arsenal. Now the Fibo. Now what did we say about the 38.2% Fibo? This is a strong resistance. 38.2% Fibonacci is a strong resistance. However, when broken, your next target would be 2 fluctuations up, which is 61.8 until 78.6. So this is always the extreme scenario. First resistance, second resistance. Resistances are areas, so this is your area, 96 to 98, if price is able to break above 93. But this is only the 5-minute chart. If you look at the daily chart, where is what resistance do you see first? If price breaks above this Tenkan-sen line at 97 or 98, your next resistance is 103. Again, this is still on a downtrend, so expect resistances. This is just a bounce trade. We're just patterning it after the bounce in MRC. So Alco could do a bounce next week because of this seemingly might form a cup and handle. It already did a falling wedge. Usually falling wedges lead to cup and handles, as we saw in previous examples. Might do this, might move back, and then break out when it finds a thinner kumo to break. Because right now this kumo is still too thick. Might go back. So you still have a chance to buy this. So what would be the target of the cup and handle? From 88 to 93? 98. Your target would be this if it breaks out of this cup and handle. This coincides with the daily resistance at 98. Which is your Tenkan-sen line. Actually, it's 97 in this picture. Quite close. So what else? AGI. AGI also showed you a head and shoulders pattern. And this pattern already broke. It broke the head and shoulders pattern. And this was warned by this bearish kumo twist. They were also warned by the bearish divergence on the RSI. So all these come together. So we can use the tools at our disposal at any time we have knowledge of all these tools. We just use it at the appropriate time. Sometimes you don't really need all of these, or you don't always need Fibonacci. You don't always need the chart patterns. You have the basic Ichimoku and you have the Heikin Ashi. This tells you that the downtrend is not yet over. All right, so do you have any questions moving forward? All right, so there are no questions. So if there are no more questions, I'd like to thank you for attending today's webinar. I recorded this session once again. I will give you the link. So if there are any questions, just don't hesitate to message me. Thanks for attending today's webinar. Have a great lunch. Goodbye.